2018 has proved to be the worst year on record for assets. With simply nowhere to turn, investors have all felt cornered. This is in complete contrast to last year, which was extremely good for most assets. What a difference 1 year can make. We have seen mainstream economists completely change their mind about the current state of the economy and suggest we're in for some serious pain ahead. You came here for the truth, so let me unveil that for you. I'm going to show you several economic indicators today. I'm going to get into the markets, of course. I'm going to show you what's been happening, talking about Apple stock, talking about a lot of factors here today. So let's begin by taking a look at the markets. Here you can see the markets. Top three are the S&P, Nasdaq, and the Dow Jones, all in the red as I record this in the middle of the day. It was actually up quite a bit today at the beginning of the day. It has now come down. It's bouncing around. Stocks are basically trying to price in the fact that next year, perhaps the Federal Reserve will not be so aggressive with its rate hikes. That's what's happening here. Obviously, the market's not buying it. There's a whole other set of issues, of course, but let's look at this. Williams also said that the Fed was listening to the market and could reevaluate its outlook for 2 rate hikes next year. We are listening. There are risks to that outlook that maybe the economy will slow further. We're going to go into next year reassessing our views and so on. So they're trying to calm down the markets here. The Federal Reserve is basically saying, well, we know what Powell said. However, don't worry, we're going to be very, very nice to you all. And of course, they're just going to do what they want to do because all of this is simply a series of predefined events. This is the percentage of assets with a negative total return in US dollar terms, currently 93%. I want to know what the year is going to finish off at. This is the worst on record, and they're going back to 1901. Yes, worse than 1929. Yes, worse than 2008. Not in terms of necessarily the dollar value or something, not in terms of GDP. This is the percentage of assets with a negative total return. Imagine that. Basically, all assets are down into the negative this year. All of them, except for 7% of them. So think about what that means for how bad things are in 2018. 2018, a historically bad year. So this chart is basically, it might be hard for you to read here, but from 2004 up until 2018. So the left-hand side is 2004, and it goes every year up until the present year. And the more red, the more bad, basically. So you're looking at 2018 being completely comprised of red. And then that is in complete contrast to 2017, which was only the US 2-year in the red. And now today, everything is getting punished. You could just look at this and see where it has gone in a simple matter of a year. Apple shares are in the crosshairs. After hitting records in October, the stock has slumped 33% in one of the worst performances on the Dow. Its technical setup is pointed to more pain. Apple has gone lower than I thought it would. Sure, of course you did. You're getting a death cross. It's one of the many different stocks out there that are seeing a death cross. Imagine that this is one stock that was touted as the best stock in the world, the biggest company in the world. And then everything changed. And what was it? Are people not buying cell phones anymore? Are people not buying computers? Is that the issue? Or is it that these stocks were overvalued in the first place and now reality is setting in? That's the case here. It has nothing to do with the fundamentals of the economy, nothing to do with any sort of fundamental aspect. In fact, this is all based on quantitative tightening done by the central bank, which is finally having its effect on the actual markets. This is Apple stock right now as I record this. It is down about 2.5%. We're looking at this at a time when this stock has been hemorrhaging. It is currently at $742 billion market cap. This was the $1 trillion stock, and suddenly that's not the case anymore. You're looking at the death cross that happened right here. A very significant and telling chart when you see this happening. Not for me, not for you, not for your local business down the street. treat, but for the technical analysts, for the traders, it is a big deal. This article here out of Reuters is talking about Jensen, who's the CIO at Bridgewater, who you might know from Ray Dalio, is anticipating GDP growth close to 1% in 2019 and a little bit lower for the rest of the developed world. The biggest theme developing is that you are going to have significantly weaker growth, near recession level growth in 2019 based on our measures, and the markets are generally not pricing that in. So that's when you get that devaluation, that deflationary aspect in the markets. And moving on to the next article, Stan Druckenmiller says algos are robbing markets of trade signals. This is what I have talked about for years. When we look at the algorithms, the computer algorithms that are in place today, they have messed up and screwed up this market. Things do not make sense, and he has some interesting points. I made 30% a year for 30 years. Now we aren't even in the same zip code, much less the same state. I think the message over 8 or 9 months is still great. I just think over a week or two, you're getting noise that used to mean something and now it doesn't mean anything. He's talking about the issues in his business today, and obviously that's going to be a problem when he's used to seeing particular technical indicators meeting certain levels, and then he trades based on that, and now suddenly because of this garbage that they've allowed, everything's broken. And it's not just because of this individual and he's not able to make money the way that he used to, that's a problem. I think that it's going to be a problem when everybody's rushing to the exits. You're going to have this huge stampede, and it's going to cause a very big issue for the average individual. Stock market woes raise a nagging fear. Is a recession near? And this is a very stupid article out of the AP. And the entire thing, as far as I'm concerned, is written by an individual who has huge skin in the game, or this person is completely unaware of what they're doing. Maybe they're just told to write the information. I don't know. But the entire thing goes through trying to convince everybody that it's going to be okay. And when all else fails, just hang on for the long term. And this is the type of propaganda that you're seeing every single day. And I got to filter through all this garbage and try to get you to the truth, but always try to understand the underlying message. Are they trying to give me information, or are they trying to give me their own idea of how it should be? Look at the buybacks that have taken place right now. Qualcomm led in buybacks, spending $21 billion in the third quarter of 2018. Apple, $19 billion in the third quarter. Oracle, $10 billion. Wells Fargo, $7 billion. And Cisco, $5 billion. This is incredible to see the mass quantity of stock buybacks taking place in a quarter for one single company. Now, yes, these are big companies, but when you're talking about nearly $20 billion worth for one company, that's huge. And still, as an example for Apple, still being punished. We saw insiders selling. I really want to know what's happening now, but we saw insiders selling all the way through this up until recently. So I'm going to get some new information and see, are they done all their selling? Because we saw consistent selling by insiders. As soon as the buybacks would occur, you would then have the stock being pushed up in price and the insiders sell. It was happening over and over and over again, and I was bringing that to you, so I hope you do appreciate it. We're going to see. I'm going to try to dig up that info. Junk bond market goes silent. Not surprisingly, cracks are beginning to show up in the credit markets. Most notably, the risky junk bond market has virtually shut down. 0 companies have borrowed money from the U.S. high-yield corporate bond market this month. Think about that. Basically non-existent. We're talking about people that are completely in fear at this time, and we have to watch out what happens, because this could easily be spread into other supposed safer markets. Beware. The global auto industry is likely in its first recession since 2009. It gets into the details of that. I just wanted to show you that this is happening everywhere in all sorts of different markets. European car sales slump in November with no sign of rebound. The problem is affecting Europe as well. This is a chart that goes along with that, and you could just see the stagnation that has taken place. And quickly, the last thing I wanted to cover was survey. 3 in 5 workers say they haven't gotten a pay boost in the past year. So we've been told that this year has been incredible by the mainstream media, that the jobs are just going crazy. We can't figure out a way to get more people. We're struggling to get more people. There's not enough people because the employment rate is so fantastic. You can see the chart that's associated with this. Majority of employed Americans haven't gotten a raise or better paying job in the past year. And you could see this in the chart form. Basically, just wanted to show you that they can lie about the statistics all they want, but you and I, we're not being fooled by it. This is what occurs in the mainstream media. You get some level of information, but it's primarily propaganda. So we need to filter through all that garbage and really try and break it down for ourselves so that we know what the truth is. This is not ever going to be spoon-fed to you. You have to piece all these little things together. So I hope that you're doing that on your own time. I'm trying to make videos about it, but I know that I'm only covering such a small percentage of the actual total volume of truth out there. So I hope that at least I'm benefiting you in some way. So definitely keep your eyes on what happens in the markets over the next little while, okay? Because what we're seeing here for the remainder of 2018 into 2019 is going to be persistent weakness. If the central banks decide that they want to engage in a QE4, they want to reduce interest rates, it doesn't matter if it's the Fed, it could be any central bank as long as they're willing to print now, because all central banks are either stagnating or they're actually reducing the amount of money that they print. This is creating a global contraction. So keep your eyes peeled on that. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you are supporting this channel. Just click that button. And 1 second, if I could just ask you, just hold on 1 second. You stayed this far into the video, and I appreciate that. But are you a subscriber? If not, I gotta ask, why haven't you subscribed to the channel? Just click that button. We have well over 160,000 subscribers at this point. I think it's around 165 or so. You have to be one of the subscribers on here. Just click the subscription button. You're gonna be able to get videos twice a day on average that I do them. They are jam-packed, hard-hitting videos, so definitely hit that subscribe button. Last but not least, if you want the financial education you were not taught in school, these 2 books have everything that you need. You can get everything from the foundation, the history, the asset classes, making money, and so much more. So check the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.